Good morning. Welcome to another episode of the Mizuho Week Ahead. I'm Boon Hing, market economist at Mizuho Bank. This week's theme is Anchors of Stability. Last week, cooling US inflation balanced the seemingly hawkish Fed dot plot, which showed only one rate cut in 2024 to send USD yields lower and buoy equities. Underlying tones of Fed Chair Powell being non-committal around the dot plot also aided risk sentiments. Meanwhile, the BOJ's deferment on revising bond purchases schedule to July alluded to delays in policy normalization, surprising markets, and saw the dollar-yen test 158. In EM Asia, as expected, the Bank of Thailand held rates unchanged as they retained their growth forecast and revised core inflation in 2024 downwards to 0.5%. Notably, the latest 6-1 voting outcomes, which differs from the 5-2 outcomes in the previous two meetings, impart a greater sense of stability within the Monetary Policy Committee amid reported threats of erosion of independence stemming from the government. Looking ahead, the Bank of Thailand will keep a close watch on fiscal slippages alongside the potential for broadening disinflation in the CPI basket. In contrast, Malaysia kicked off subsidy rationalization at the start of last week as they removed diesel subsidies, and that saw diesel prices rise 56%. Cost of living pressures will be offset via cash handouts to low-income households, as well as lower prices for logistics and transportation companies. Inflation pressures on aggregate are likely to remain mild, while the firm commitment to fiscal consolidation will structurally underpin the ringgit's recovery. In Taiwan, the CBC proceeded with their expected rate hold. Nonetheless, they raised their reverse requirement ratios and tightened house buying rules such as lower mortgage caps to stabilize property prices, which continued to soar in Q1. Down under, Australia's employment was higher than expected on stronger hiring in full-time jobs, and the unemployment rate also edged lower to 4.0%. Nonetheless, RBA looks set to stand pat today in the face of sticky inflationary pressures, which has eroded household purchasing power and diminished household savings ratio. In turn, while the stock of employment remains healthy, the RBA will be wary of not excessively tightening borrowing costs and raising interest burdens, which constrains the support from income flows. With the bar for another hike being a very high one, Aussie bulls will have little to run on aside from latching onto the broader dollar trend. In Indonesia, the rupiah's underperformance since the last Bank Indonesia's meeting has been exacerbated by President-elect Prabowo's plans to increase the debt-to-GDP ratio to 50% from 2023's 40%. We now expect Bank Indonesia to proceed with another hike this week. In addition to providing a stronger anchor for the rupiah, higher fiscal expenditures, which require higher borrowing, could mean structurally higher inflation going forward, necessitating the need for higher nominal rates. All in, even as USD yields decline, relief for EM Asia FX may not be as readily forthcoming. As such, central banks this week will continue to attempt to anchor macroeconomic stability to support growth recovery. For more information on these key central bank events this week, please refer to our Week Ahead publication or contact your respective sales desks and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you.